Hello, Intro to Accounting, Mr. Roberts again, and today we're going to go through lesson 4-2. And what we're doing is we're taking our transactions from our general journal, and what we're going to do is we are going to post to our general ledger. So remember, the general journal is what we did last unit. It was recording and journalizing all those transactions. And now our general ledger is going to be specific accounts where we show how that account's been affected, and there's a running total balance. So normally, when we get through this whole accounting cycle, the steps though that we kind of have is like looking at a transaction, kind of going through the T account, and then journalizing it, and then from there, and we journalize it in the general journal, and then we post it to the general ledger. So that's what we're going to look at today, along with one small little concept, which is proving cash, which we don't get too deep into, but just so you know what it is. So the first thing we're going to look at is when we're going to, or how we're going to transfer information from the general journal to our ledger, our account ledger. And anytime that we transfer this information is just called posting. Okay, so we are posting to our ledger. And it's also going to sort all the journal entries, so the debits, so we can see how all the debits and credits affect a specific account. So here we go. If you look at the different parts here, in our ledger, we have our date, we have our post reference, we have our debit column, our credit column, and then we have our balance. So let's just walk through the steps. Let's read the steps here to start. So it says posting amount from the debit column of a general journal. It's really similar if it's a credit, but we'll get to that. So the first thing you do is you write the date. And here you're writing the year and the month. We will only be writing the month or the day on there. It's like the same thing when we started a new journal page, right? The ledger, you do not need to put the month in there every single time. You only need to do it the first time. So you write the date in the date column of the account. Next, you write the journal page number. And you know, we're going to be posting from the general journal most of the time right now. So it's almost always going to be G. And what does the 1 stand for? That's the page of the general journal. So G1 in the post reference column of the account. And post reference is an abbreviation for the posting reference, meaning we're posting what do we go back to and look at if we have a question here. And that's going to be post reference. After that, we write the debit amount, $2,000 in the debit column of that account. And then number 4, we write the new account balance of $2,000 in that balance debit column. So we write in how the account was affected, and then we balance the account after. And number 5 is we return to the journal and write the account number 110 in the post reference column of that journal. And the post-reference column of the general ledger and the general journal serve these 3 purposes, okay? So when we have this post-reference column, this is what it does. It helps, number 1, show an entry in an account can be traced back to the source in a journal. Okay, so that means that we could look here and we can go, oh, this is on general journal page 1. I have a question about it. I can now go to general journal page 1 and look at it. Here, you could say, oh, this is from account number 110. And then you can go to the ledger account 110 and you can go ahead and research it. An entry in a journal can be traced back to where it was posted in an account. That's exactly what I just talked about with 110. And then if posting is interrupted, the accounting personnel can easily see which entries in the general journal still need to be posted. You guys, this is what I was talking about before, where you went through and in the general journal, you just wrote down everything. Well, this is exactly why I told you not to do that, okay? Is because now we're at a point where, let's say we need to stop in our accounting practice because we need to, I don't know, use the restroom, or our shift is over and we're going to come back to it tomorrow. Well, this post-reference, you can see, is the last step, and it shows that we have successfully posted to our ledger account. Okay, so it successfully shows that. If you just go in and type in all these post references beforehand, in real life, you are going to be way screwed up. So I'm not going to let you do it in class anymore either, okay? I let you kind of get by with it a little bit before, but you are going to do the accounts in order, in the steps that they are designed to do, because it's really bad practices if you were ever going to do this in real life. So we're not going to build up those bad practices. Let's look at what this looks like here, step by step. We write the date, okay? After that, we write the page number. Remember, we're recording this on the bottom for the most part, right, in our ledger. So then we're going to put the post reference number, which is general journal, represented by a G, and the page number 1. Third step is we see how this account was affected. So here it was cash, and cash was debited $2,000. So we go down here and we debit that amount, $2,000. The fourth step is we balance out our account. Well, since this is the first transaction that we have, it has a 0 balance to start. So if we have a debit amount of $2,000, well, now our debit amount of $2,000 is our new balance. The last thing that we do is we track our account number, or we take our account number here, and to show that we've successfully completed all the steps, we put this in the post reference of our general journal. All right. So if we move on here and we take a look, we have posting amount from the credit column. Now, how much different is this? It's pretty much no different at all, okay? The only thing that we're doing here is, you can see that this is the second part of that transaction from our general journal. Well, all we're really doing here is we are now posting the credit column. So we follow the same steps, right? We write in the date, then, and you can see we're recording this in Michael Delgado's Capital, account number 310. We write in the date, then we write in our post reference, which is still G1. Now, we're not writing in the debit column, we're writing in the credit column. And our credit column here is $2,000, okay? So $2,000. You can see that we credited Michael Delgado's Capital because it increased. So we credit that, and now we move our balance over, okay? So because this is the first transaction here for Michael Delgado's Capital, the credit, or we're going to have a credit balance now of $2,000 because it was at 0. Now it's at $2,000. And then we move our account number into the post reference in our general journal. There we go. Nothing really different there, okay? It's all pretty much the same. Now we're going to post a debit amount to an account with a balance. All right, so if we look at this, we have, I don't really like how they go through this, okay, because they give 2 examples, one after the other. Let's just look at the first example here. So now we're on, let's say, the 5th. The date is the 5th, okay, and we are posting the supplies. It shows that supplies here went up, it got debited, and it gives us the rest of this information. So how do I do this? Well, now I'm in supplies, and I just write 5, right, for January 5th, because this is the second transaction. I don't need to write all of January in there. Step 2 is I now take this page number and I just put G1 down, okay? So I'm still on general journal page 1. Next, I see how is this how is this transaction affected? Well, it looks like supplies was debited $220, so I put the $220 in the debit. I post $220 in the debit. And then when it comes to the balance, well, how do I figure this out? Okay, how did I actually do this? Well, let's take a look here. All right, we had 165 as our debit balance. Okay, before we came over here, 165. All right, so now what happens is we debited this another 220. So we took the 165 plus the 220, okay, and what do we get? Well, we get 385. Okay, so this is our new balance. Remember, this supplies account is looking at what it's doing is it's totaling up all the times the balance of our supplies here, right? So we initially had $165 worth of supplies. We added $220 of supplies. We debited that account and we increased it. And now our new balance is $385. That's how we got to that number. So we're accumulating this balance here, okay? The next one here was accounts payable, and it's a little bit messy, but you can see that, oh, I'm sorry. Step number 5, remember, we successfully posted this. We need to make sure that we take this account number and we go back to our general journal and we put in 150. Okay, so now we successfully posted our supplies account here. I'm going to take this off, and the same thing for accounts payable is happening. Okay, same exact thing. It's just really messy, so I'm not going to use that as an example. You're going to continue to do this. You're going to continue to do this on your own, and it gets easier as you do it. So then it just kind of shows what a journal page looks like when posting is all completed. And this is it, right? This is what you did on your last test, if it's all completed, you can see all these post reference numbers, right? You can see all of them there. And that shows that this general journal page has been completed. So make sure that you follow those 5 steps. It even says here, please, posting will go smoothly if you consistently follow the 5 steps of posting. The last step in posting is put the account number in the post reference column of the general journal. Do not go down and just fill in all the post reference numbers, okay? I'll call you out in class. Not like that. I'll just say, you got to go back and redo this, all right? Because we'd be starting bad habits. Then if you look here, here's what a general ledger would look like with this posting complete, right? So the balance is constantly calculated. You can see here for cash, this tells a story too. Every time that cash increased and then decreased, and then this balance is constantly being accumulated. And you can see for the other accounts as well, okay? So it's just giving you examples. So the last thing that we're going to look at is proving cash, and this is more so just in theory right now. But it says determining that the amount of cash agrees with the balance of cash in the accounting records is called proving cash. So, you know, cash is one of those things that can get lost, it can move around. We always want to be able to prove cash, which just shows what we have on the books is what we actually have. Delgado is going to prove cash at the end of the month, and you know, it's going to show the balance on our checkbook. So what this is a check stub, and we'd constantly be carrying this balance, right? So like in our checkbook, we're keeping track of our checkbook and we're showing what our cash is, right? So it's like a different form of tracking our cash. And when we say checkbook, well, a checkbook and our cash are like one in accounting. We're not really paying things with cash. We're writing out checks for it. That's how we get our source documents. So here, if we look at our checkbook and we look at this line that's called the balance brought forward from the last 13 transactions that we had, our balance brought forward is $2,597. When we get done proving, or excuse me, when we get done posting all of our cash accounts, and we look at the debit balance, it should match, and you can see here it does. The 2,597 matches the 2,597 for the balance brought forward. That means that cash is proved. Okay, that's really what it comes down to. We'll do more of that in later chapters, actually. And then the last thing I just want to point out is this: whenever the debits in an account exceed the credits, the account balance is a debit, right? So if we have a bunch of we'll keep on adding those debits up. Whenever the credit in an account exceeds the debits, the account balance is a credit. Now this is the hardest thing in this unit, okay? And what it ends up being is sometimes an account can have a balance of a debit or a credit, and it can actually go back and forth between them, right? I'm trying to find one that's in here, which I'm not seeing, and that's going to be the most difficult part of this unit, okay, is some of the accounts seeing what their actual balance is and calculating that. We'll cross that bridge when we get there and look at it through the examples. So let's jump into the work together. All right, so here we are on Working Papers 4.2, and we want to post to our general ledger, which means take all the information that we already recorded in our general journal, just like and this is what we completed in Chapter 3, and we want to post it to the general ledger. So that's what we're going to do here. And I am going to tell you guys that this is a little bit time consuming as we're posting here. Make sure that you remember that you can hit save and continue at any time, and it's going to save your progress if you need to maybe take a break or stop and do something else. So let's go through here and keeping in mind the 5 steps for posting from the general journal to the general ledger. So going from the journal to the ledger, and let's just make sure we keep those in mind. So the first thing we're going to do is we have the April 1st transaction from the general journal, where it looks like we received an investment, right? Some cash from Omar Boje here, and it increased his capital. So it looks like the owner made an investment. So let's go first into this account, and we know that cash is affected. So we're going to open up the cash general ledger. From here, the first thing we do is we're going to write the date in the column of the account. So down here, we're going to write in April, because it's the first entry that we have. So April 1st. Next, we can actually skip over this. We don't really care like what the item actually is, because we're not going to say like owner investment or anything. It's just too complicated, and we don't need to do that. We just need to know where our cash is going. If we really need to know that, we can always refer back to our general journal. And how do we refer back? Well, we're going to write the page number here. So how do we write down the page number? Well, we say, okay, this is page number 1 of the general journal. That's going to be recorded as G1. There we go. Step number 2 is we write the amount in the debit or credit column. So what was this? This was cash, and we debited $2,500. So let's go ahead and do that. It was a debit amount for $2,500. There we go. Number 4, we calculate and write the new account balance in the balance debit or balance credit column. Well, here we don't have a balance yet because it's our first transaction in this ledger, or in this ledger account. So we know that now the balance is a debit of $2,500. And there's one final step. The last thing that we must do is we go up to this post reference, and we are actually going to write the account number in the post reference for the journal. Now remember, this is very important because it tells us that we have now posted this cash transaction, and it helps us to go back and refer. We can look at both of these. We can look at the journal and say, hey, if I have any questions about this, if it's recorded correctly, I can go to account 110, which is cash. And here I can say, hey, I don't know if this was correct. Why don't I go to general journal page 1 and refer back up to the general journal? So it's a really nice way to see where the path of your transactions have kind of gone. Maybe you need to take a break right now or whatever else, and you didn't finish this. Well, I know that this capital account, or this capital part of this transaction, has not actually been posted to the ledger yet because I do not have a post reference. So that's the whole purpose of that. Okay, so cash is done. Next, we have Omar Boje Capital. Let's go down here, and once again, we're going to put in the date. First one, so it's going to be April 1st. Let me put in the post reference number. You guys, all of this is going to be G1 when we're working on this first page, right? General journal page 1. When I go to page 2, then it'll be different, but right now it's all G1. Next is we are going to write the debit or credit amount. Well, it looks like it was a credit of $2,500. There we go. And now we're going to write down the balance. So this balance starts at 0. So now it's going to have a credit balance of $2,500. We just transfer that over. And the last thing is put the post reference account number, which is 310, up here in our journal. There we go. So this transaction is all complete. Next, let's go down to prepaid insurance. So let's find prepaid insurance. It's right here. Put in the date, April 3rd. Post reference is journal 1. Is it a debit or credit? It looks like it's a debit for $330. And now our balance will also be a debit of 330 because, right, this starts at 0. Okay, so it's a debit of 330. And this is account number 140. The last step that we have is writing this in our post reference. Okay, so account number 140 will go up here. Next, we have cash. Now is where things might get a little bit more complicated. But first thing we do, we follow the 5 steps. We write down the date, which is the 3rd, right in the post reference, which is G1. Then we're going to write down if it's a debit or credit. And here it is a credit of 330. Okay, so now we need to write down this balance. I just want to show you guys this little, I'm going to skip over here to this little chart, okay, up here. And I want to talk to you guys about this and how we're going to get here. Well, let me actually just do it real quick. The balance was $2,500 and it's a debit balance right now. So what I'm going to do is, because this is a credit amount, I will subtract 330 from my debit balance of 2,500. Let's go ahead and do that real quick. So 2,500, this debit balance minus 330 credit is 2,170. Now I'll have a debit balance of 2,170. This is really important because a lot of people will say, oh, it's a credit, so now the balance must be a credit. No, it's not, okay? It could become a credit, but in this sense, my debit balance of 2,500 is way bigger than the 330 credit. So I just subtract that, and now my debit balance goes down. If we look, oh, I'm reaching a limit. Okay, so if we look at this, I want you guys to think, well, we're using cash here, so let me just put cash up top. Every single account starts with a 0 balance. And this is how I just want you to kind of picture this for now, because a lot of people have trouble with this. And depending if it's a debit or credit, it can move this balance left or right. So the first transaction that we had with cash, I'll get there eventually here. First transaction that we had with cash moved the balance to 2,500 on the debit side. Right? So it took this 0, and what it did is it moved it this way, right? That's what it did. And it made it, let's go back for a second. It made it so the new balance here, let me just get out of this real quick. What do I have to click out of here? I. Oh, there it is. Sorry about that. So what it made it was a new balance But made it was a new balance 2,500. Okay, that's what it did. It made this new balance of 2,500. I'm just trying to write it a little bit higher. So now we had a debit balance of 2,500 because we had that transaction. If we have another transaction that occurred, which was a credit of 330, now is this going to take this 2,500, subtract 2,500, and move it all the way over to the credit side for 330? No, it is not. Okay, that's not going to happen here. What it does is it actually just moves it further in this direction. Okay, that's it. So 2,500 minus the 330, because that's technically what we're doing here, is going to equal a new balance of 2,170. So it's just moving it closer to that 0 balance to eventually move it over to the credit side, if that was the case. Now, is cash going to go on to the credit side? Probably not. But you can see that this is how this works, okay? Everything starts at 0, and then it kind of goes in one direction or the other. So it started out going to the debit side, and if now we have a $330 credit to cash, it does not move it all the way over to this side. Okay, that does not occur. It's just going to move it further over towards that zero balance. So essentially, you're just subtracting that amount. So if there's a transaction and it's a credit like this 330, it does not make the balance automatically 330. That's what you want to avoid. Okay. So there we go. That's where the 2170 comes from. 2,500 debit balance minus the 330. We still have a debit balance of 2,170. What do we do now? Well, our fifth step, and we are going to put our post-reference account number 110 up here for cash. Now, I know you guys are looking at this, and some of you that are like, ooh, what's the quickest way to do this? And you're going to come down here and you're going to say, oh, I'll just put 110 for all these because I know they'll all be 110. Do not do that, all right? Because that's a tool to help you remember where you are. I assure you, you will mess it up, all right? So just go through it one step at a time. Don't try to hack it. Accounting is not something that you're really trying to hack. You got to go step by step as you're going through here, okay? Just like I'm doing. So the next thing is supplies. First thing we do, we put in the date. Next, we put in our reference number, which is G2. Oh, excuse me, G1. We're still on the first page. So supplies here is going to be a debit of 160. We carry that balance over, and now we write account number 130. There we go. Accounts payable for ready supply. And it looks like this is a $160 credit. So accounts payable, it's April 4th. We're going to write in the date. Post reference is G1. And it is a credit for 160. And we'll have a 160 balance on the credit side. Last thing we do is we're going to put our 210 up by the post reference. Next we have cash. So the date on this one is the 8th. And it looks like it's G1 again. And it's $325 debit. So what is our balance going to be? Well, now we are taking 2170 of our balance and we are going to add the 325. So remember, we had this 2170 here and we are adding a debit. So it's going to make the balance go this way, right? It's going to continue moving it further down the debit side. So let's go ahead here. 2170 plus the 325 is 2495, and it's still a debit balance. Last thing we do is write the post reference number, or write our account number in the post reference column. Okay, that one's done. Let's move to sales. So sales here is on the 8th. Let's write in the date. Post reference is still G1. 325 in the credit column. And we'll have a balance of 325. Take account number 410, put it in the post reference. Next, accounts receivable. Dan Carroll. Put in the date. Post reference is still G1. $122 debit. Bring that balance over. Last thing we do is write in our account number in the post reference. Sorry if you can hear my dog. They're going. Alrighty. And then the next thing is going to be sales. So we have sales, and this date is on the 9th. All right, so we have the 9th. Post reference is going to be journal page 1, and it's $122 of credit. So now we're on the opposite side of that spectrum, right? For our sales, we had $325 on the credit side, and we now have $122 sale. So it's going to move it further to the credit side, right? So now we have another $125. Let's go ahead and do that. if you really think about this, this is sales. So like, how often are you going to post a sales on the debit side? Not very often, right? Because are you going to have a negative sale? Probably not. 325 plus 122 was 447. All right. Last thing we do is we actually move this 410 up here. Okay. Next is rent expense. Let's find rent expense. Looks like it's April 12th. Oh. There we go. G1. Rent expense here is 260 debit. And we move that balance over. We'll put 510 here. Oh, my numbers are a little off. There we go, 510. Next, we have cash. And looks like it's a credit, just so you remember. The right-hand side here is our credit. So let's put in the 12th, G1, and $260 credit. Right now I have a debit balance of $24.95. So what I'm going to do is subtract the $260. $24.95 minus the $260 is $22.35. And it's still on the debit. It's still a debit balance. So we did that here, and now we're going to put 110 for the cash post references. Next, we have accounts payable for ready supply. See that we already have one thing in here. So let's put in the 15th, and it is an $80 debit. So right now we have a credit balance of 160, and we would subtract the $80. And so 160 minus the 80 is 80, okay? But it's still a credit balance. Why? Because this credit number is bigger than the $80 debit, right? So it's still an $80 credit balance. Last thing we're going to do is put the 210 up here in the post reference column. Next, we have cash. So let's move this cash. We'll put in the date, G1 again, and it's $80 as a credit. So once again, this is a credit subtracting from a debit balance. $22.35 minus the 80 is $21.55. We'll take our account number and put in the post reference. Next, we have cash again. Looks like it's on the 16th. Still on page 1. $65 debit. And it's on a debit balance. So now we're taking the $21.55 plus the $65. Now we're adding it because it's a debit on top of a debit balance. So 22222220. Excuse me. So then let's move account number 110 up here. Right? Or let's write it in the post reference. We're not actually moving it, obviously. And then we have accounts receivable Dan Carroll. And this is going to be the 16th, still on page 1. And it is a $65 debit. Oh, no, it is not. There we go. We don't want to mess that up right on the last step. It's a $65 credit. So we have a $122 balance here. That's debit. And that debit balance is larger than the credit balance, right? So we know it's still going to be a debit balance at the end of this. But we're going to take the 122 minus the 65. We're going to have $57. There we go. And we will write in the post reference. Okay. And now, what would really stink if you don't remember to move to page 2. So remember to move to page 2. This is just changing our general journal to page 2. Nothing else. And it looks like Omar Boje is going to take out some money. So let's go into the drawing account. Make sure we write in the full date since it's the first entry here in this ledger account. Post reference now is G2. G2. It is a debit of 500. And the balance will be 500 as a debit. Account number 320. There we go. Next, we have cash, the last cash transaction, or last cash posting, excuse me, that we'll have here. This is on G2. And let's see. It was $500 credit. So once again, we have a debit balance of $2,220. And we are going to subtract 500 because that's a credit. Make it 1720. And then let's put the 110 in post reference. And there we go. Hopefully that is everything. Let's see. Just so you guys know, you can open and close these just by clicking on them like this. I'm just going to look through real quick. Make sure I have G1 on all of it before I hit submit. I mean, I'm pretty sure I do. You know, anybody can make mistakes. And we'll just go back to the page, and you can see that this is what it's going to look like when you're all completed, right? You can see all the post references. That's giving me indication that I have posted all of these. So let's save and continue. And the suspense. There we go. It moved me to on my own. Let's just save and continue on there as well. And then I'm done, and let's grade it. And we have the 3 out of 3 over here on the right. So that is going to be your work together. I know it took a little bit longer, but it's good to just take your time when you're going through this. That's why I'm giving you an additional day on it. So if you have any questions, please let me know. Please refer back to this video as much as you need to until you just get in the rhythm of this. All right, you guys have a wonderful rest of your day.